Welcome back to this Moneycontrol live stream. You're watching Closing Bell with me, Nandita, Khemka. What a terrific Tuesday it has turned out to be for the markets. It's been raining records today. If you look at the Sensex, it has hit that 78,000 mark for the first time ever. In fact, it has managed to shut shop above that level as well. The Nifty as well has closed above that 23,700 mark. But, the talking point today is the Nifty Bank Index. It has not only hit that 52,000 mark, but, it has ended at 52,600 mark. So that's a 900 point rally coming in and almost 2% uptick on the Nifty Bank Index. So it was a rally which was purely driven by the banking pack today. Midcap Index hit a fresh high, but it took a U-turn, so the broader end of the markets were underperforming today. If you look at the India VIX Index, that has strengthened a little bit more after yesterday's 7% surge. We are coming close to that 15 level, but of course we have that monthly expiry to watch out for on Thursday. Ahead of that, there has been volatility. Yesterday was extremely volatile, but today, the direction has largely been on the upside. Breadth, however, was tilted in favor of losers, evenly distributed 1:1, but the declines were greater than the advances today. Among other sectoral movers, auto, FMCG, metals, realty, these are some of the pockets that took a breather. IT, by the way, did well today, and the Nifty Financial Services Index, it was expiry today for that particular index, and it gained somewhere around 2% or thereabouts in today's session. Aside of that, if you look at the individual movers, of course, the gainers list was dominated by banking names. So you had the likes of Axis Bank, HDFC Bank, ICICI Bank emerging as the top gainers. What also did well was Shriram Finance and HDFC Life. On the losing end, you had BPCL, OMC basket under pressure because crude is back above that $86 per barrel mark. So reacting to that. Aside of that, you had the Eicher, Power Grid, Asian Paints, Tata Steel. Metals also was under some bit of pressure today. So some of these names featuring on the losers list. But let me also bring on board our guest for today this afternoon. Joining me is Ruchit Jain, who's the lead research analyst at 5paisa.com. Great to have you on the show, Ruchit, on a day when we hit record highs. But tell me one thing. Where do we really head from here? Do you think, the Nifty perhaps may top out only after hitting that 24,000 mark?
Yes, hi, very good afternoon, Nandita. And I know it's really a good day to chat with you. Because we have again registered a new record high today, and it's not that only Nifty has been going higher. But I think the Bank Nifty, the way the leadership has been taken by some of the private sector banking names, I think that clearly indicates that this uptrend which is going on since last few weeks is likely to continue going ahead. So we are at all-time high, and generally whenever we see all-time high levels, we take retracements of previous corrections to come out with any kind of resistances, and the next resistance is seen around 23,900 to 24,000 mark. So I think you rightly pointed out that if any reversal or pullback move has to be there, then I think first we would see that 23,900, 24,000 getting tested. And today we witnessed that the broader markets have seen some correction. I think it was more or less similar to last week's Thursday session, where we witnessed that the broader markets saw a pullback move, but the private sector banking names took the leadership where buying interest was seen. I think similar thing is going on now, that there are corrections in the market, but stock specific corrections are there, not on the index front, because there have been a lot of heavyweights which have seen a relative underperformance in the past. When the markets have rallied, you see private sector banks, they have not participated very aggressive with the recent run-up. Even IT names have not seen any kind of significant run-up. The stake heavyweights such as Reliance Industries, or you see some of the insurance names. So I think there are many pockets which have shown relative underperformance, and where the risk-reward ratio is now favorable to for the next leg of rally. So I think such pockets or such stocks would now take the leadership which we have seen today, and the markets would continue to inch higher. So 24,000 certainly I think on the cards, maybe tomorrow or day after tomorrow itself. And until there are any signs of reversal, it's better to trade in the direction of the trend.
All right, you are sounding very bullish. In the next couple of sessions, we could be actually looking at the 24,000 mark, right? But the Nifty Bank Index, of course, you mentioned that, the rally, of course, has been driven by the Nifty banking pack. You have seen leadership emerge there. But among the four private sector heavyweights, Axis Bank, it's at 52-week highs. HDFC Bank managed to close above that 1700 level, which was being seen as a key resistance level for the stock. ICICI Bank, market cap has hit that $100 billion mark. Stock hit a fresh 52-week high today. Kotak Bank, on the other hand, did well, but on a YTD basis, this particular lender is still giving negative returns. So if I ask you to choose among these four stocks, where do you see more room for upside on the charts?
So all the stocks in fact look positive, but if I just see in terms of how positions are formed, then Axis Bank within this four names have seen the highest built up today, where about 14% open interest built up was seen in the future segment. The stock has also hit its 52-week high. So fresh long built ups have been seen, although OI addition is there in all the four names, but Axis Bank stands out with 14% OI built up, whereas HDFC Bank would be the second one, where 7.5-8% open interest rises screen. So I think yes, the private sector banks are witnessing some good buying interest after a lot of after a long period of consolidation. So I think these move is likely to continue, and in terms of ranking, and the Axis and HDFC, both of these names looks better based on the open interest development which has been seen today.
Another stock from the banking pack itself, Bandhan Bank, on the back of news flow, it was reacting to it today. RBI has appointed an additional director on board to facilitate a smooth transitioning on the CEO front, right? But if you look at the stock on a YTD basis and 6-month basis, the stock has given negative returns, down 16% or thereabouts. But in the last 3 months, or 1 month particularly, it has seen some bit of momentum, picking up. In the last 1 month, the stock is up 7%. But barring today's move, do you see that, or do you expect this momentum to continue here on?
I think last 1 month's move could be seen as a pullback move, because the stock had already seen a significant price-wise correction and the momentum readings were quite in the oversold zone. But if you look at the relative comparison with other private sector names, then I think relatively it has seen a lot of underperformance. And whenever you see such a long period of underperformance from any one stock within the sector, then when the sector rallies, those stocks are the last ones who show some catch-up move. So I don't expect stocks such as Bandhan Bank to take the leadership or show any kind of significant outperformance compared to some of the other private sector names. Even we spoke about the large cap names. Even if you see some of the mid-cap banking names, then stocks such as City Union Bank is there, IDFC First Bank is there. So I think these names within the private sector banks would see more buying interest whenever the mid-sized banking show any kind of rally. So I think Bandhan Bank, maybe we won't see any significant price-wise correction from here on, but there are no signs that it would relatively outperform the other banking names within the sector.
All right, that's the view. I think we had a holistic view on the entire banking pack. But now moving on to some of the stocks that were, high flyers in today's session. First of all, Amara Raja. It has inked an agreement with a Slovakian firm, and reacting to that, the stock jumped somewhere around 19% or thereabouts. For the year, this year itself, on a YTD basis, the stock is up somewhere around. In fact, I think it has nearly doubled. How is the risk reward looking here?
So one needs to see some positional charts as well for the stock, because this stock was under a long consolidation phase when even Exide had seen a good rally. We had seen a huge underperformance from Amara Raja. Right, if you look at positionally, then in September 2015, so we are talking about 8 years ago, the stock had formed a high of 1120, and after September 2015, the stock gave a breakout of above that previous high recently in the month of April. So I think that it has come out of a long consolidation phase or a corrective phase of about 7 to 8 years, and the kind of momentum we have seen in the stock post elections. I think this is clearly a renewed buying interest which has been going on in the stock. Yeah, if you are a short-term trader and looking from a risk-reward perspective, then definitely the stop losses are too high after this recent run-up. Even the 20 DMS support, which is short-term moving average, is coming around 1340. So I think that's where the support is placed. For fresh positions, it would be advisable to look for any kind of dips. In case if you see any dips in the near future, then use that as a buying opportunity, because the trend for the stock seems quite robust after coming out of this long consolidation phase, and then any existing long positions are there, then I think they should continue to ride this trend.
All right, that's the view on Amara Raja. But what about a Craftsman Automation? This stock was also up and about 12% up move today. It has signed a pact to buy an auto components firm, Sunbeam. Stock hit a fresh 6-month high. Recently, we saw the company conclude its 1,200 crore rupee QIP issue as well. In the last 5 sessions, the stock is up 14%. But here, would you look at it as a positional play, or would you say that you can perhaps play it on a short-term basis?
I think it's better to look at a positional play, because the broader trend for the stock seems quite strong. And today we have seen, although it was a news-based move, but the volumes were quite high in this stock. So I think the downside seems to be very limited from here on as well. In the near term, no, 59.60 is the where the resistance would be placed. Again, we are taking the retracements of previous corrections, and positional targets should be seen around 6,500. So I think if already the stock has rallied about 13-15% today, so I think no, in case if one has to play this now, it has to be more of a positional trade rather than trading for a very short term. And positionally 6,500, I think could be seen in this name.
And from the mid-cap IT basket, are you spotting anything? Because Happiest Minds was one stock that was reacting to news flow. There was a block deal. The promoter has brought his stake down. Stock was down quite a bit, and even on a YTD basis, we've seen a 7% downtick. But from the mid-cap IT space, anything that's looking interesting on the charts?
So Happiest Mind did witness that gap down opening because the block deal was at a huge discount compared to yesterday's closing. But many times we see that post that gap down, the follow-up move is very important. So once the block deal happen, if we see renewed buying interest in such names, then I think prices try to form a stable or form a short-term bottom over there. But we have not seen such case in Happiest Minds today. Post that gap down opening, also throughout the day we had seen some selling pressure. So it's better to wait for some kind of reversals to come in the stock before entering fresh longs over here. I think rather within the entire mid-cap IT basket, if one looks, then emphasis looks quite positive from a positional perspective. The stock has gone through a price-wise corrective phase. Now some consolidation is going on, but again in this consolidation, I think the downside seems to be very limited from here on. So if one can keep some patience and one is looking to invest from a positional perspective from the mid-cap IT names, then I think emphasis is looking good. The stock has recently formed a good support with around 2200 level. So till 2200 is intact, go long on emphasis with stop loss below that support level and have some positional view. I think the stock can deliver good returns.
Also a couple of more stocks. Then Zomato, that this stock has been doing well, very close to 52-week highs, sustaining above that 200 level. But we've got brokerages giving positive views on the stock. Targets being set at 250 rupees, 248 rupees. What are your own thoughts? How far could it go before entering that overbought zone?
Yeah, so I think the stock has went through a corrective phase recently after the numbers. Before numbers we had already seen a good rally in the stock, and after the results, the stock corrected from about 205 to almost 150, low of 150 we saw on that elections result day. So I think the corrective phase has been done in the stock, and again the high top high bottom structure has been resumed. So this is clear indication that renewed buying interest is there in the stock. Technically, the targets for the stock are coming around 245, so much around that the levels that you have mentioned. So I think the stock has potential to rally towards that 240, 245 kind of range, before showing any more corrections.
The last stock on my list for today is Worldpool. The stock has done well, right? It's up 26% since the 4th of June. Stock is up 40% since promoter stake sale. The promoter stake sale in February. Now Kotak Institutional has maintained a sell call with a target price of 1350 rupees or thereabouts. But what are your own thoughts given the kind of up move we've seen on this particular stock? Are there signs of topping out emerging here?
Not yet. There are no signs of topping out, but I think the stock has recently rallied because the entire sector has done well. You look at other stocks within the sector, they have also shown a good outperformance. But yes, if you look at the recent swing highs, then around 1850, 1900, there is a resistance, where the previous highs of August 2022 were seen. So I think the stock is nearing its resistance. So the risk reward issue certainly is not favorable to make fresh longs. I think it's better in case if anyone is holding long positions, then one can prefer profit booking at current levels and rather look to switch to other names such as Havells or Voltas.
And what about the tire pack? I think the entire pack has been active for the last few months, so to say. Apollo Tyres, JK Tyres, Seat. Anything that you would advise a trader to look into?
I think even from a short-term perspective, the tire segment is looking quite robust. Even today's trading session, we witnessed that a good volume was there along with the price of move. Apollo Tyres specifically from this segment has given a breakout from a falling trendline resistance with better volumes than average. So I think this stock has potential to rally towards 540, 520, 545 in the near term.
Right. As we step into the monthly expiry, what is the kind of strategy you would advise traders to take? Of course, we have the expiry, Nifty expiry on Thursday, tomorrow is the Nifty Bank expiry. So any strategies both on the Nifty and the Nifty Bank?
So for this series, for next couple of trading sessions, as I said at the start of the show itself, that the momentum looks quite positive because this rally has been led by the heavyweight. So one can expect this further up move in next couple of trading sessions. Nifty maybe 23,900 levels that we are talking about, that could be seen 23,900 to 24,000 range. While on the Bank Nifty front, I think 54,000 is where the retracement levels are coming. So quite possible that we would see those levels in the near term. Now, how the next expiry or the start of the next expiry would be, that is very crucial, because what has happened in this series, we had a big event, which has surpassed, where FIs were short before the event, the client section was long, but post the event, the positions have reversed. FIs have their long short ratio of FIs have risen from about 13% to almost 60% now, which clearly indicates that the biasness has changed, their mindset has changed, and they have now been forming long positions in last couple of weeks. Even in the cash segment, we have seen some buying figures from FIs after a long period of time. So in case if they roll over their long positions to the next series as well, then I think the momentum should continue going ahead. So I think a lot of sector rotations are going on right now. There is good buying interest in the heavyweights, and that should keep the momentum on the index also intact.
All right. So in this market, what would you be recommending for our viewers?
So a couple of recommendations. One can expect a good move in HDFC Life. So HDFC Life is one stock where the structure is looking quite positive. We have seen the stock has even this stock has gone through a long corrective phase, and finally after a positive divergence, the stock seems to be starting a formation of a high top high bottom structure. So with a stop loss below 575 HDFC Life, one can go long for potential targets around 620.
All right, that's a recommendation coming in from Ruchit. With that, Ruchit, thanks a lot for taking our time and joining in this afternoon, a rather sanguine afternoon, so to say, trading session, so to say, but hopefully the momentum will continue. And as you said, we'll be watching out for those 24,000 levels on the index. Thanks a lot. Look forward to our next chat.
Thank you, Nandita.
Well, all right then, we have shut shop at record level, 78,000 on the Sensex and 23,700 on the Nifty. As Ruchit mentioned, we could see the momentum continue in the coming sessions. But with that, we are completely timed out on this edition of Closing Bell. Thanks a lot for tuning in, but you guys stay tuned to Moneycontrol for all your other news and updates.